to you for your time. We do appreciate it. Let's start with the uranium space for today because that's looking pretty impressive. I'm looking at Paladin up about 14% at this stage, and a lot of this is on the back of those Japanese elections. But we knew the likely result, so why are we seeing such a pickup now?
There's been some big moves in the uranium space. Paladin now up over 20% just today and yesterday alone. And while, I mean, shareholders can be happy, it doesn't really compare to the massive price decline we've seen across uranium stocks over the past couple of years since the Japan crisis. And a lot of this is to do with the election of the LDP in Japan. They are pro-nuclear, and they will be looking to progressively switch back on the reactors over there. And around in the near term, in terms of uranium, Japan is key to the market. As their reactors sit idly by there in Japan, they're sitting on huge stockpiles of uranium, and really the uranium price is being kept very depressed by the fact that Japan could have come into the market and started selling off these huge stockpiles, which would have been a massive negative for the uranium producers in the market. If we actually have a look at the uranium price, you can see how this is a 5-year graph, you can see after the 2011 March crash there just how prices have declined, actually bottomed all the way down to a loss of 44% to the lows that were seen in September this year. But if we look across the uranium space in our market, Paladin is one of the most commented on. It's the largest of the uranium miners. Recently it has struggled under debt, it's struggled under a weakening uranium price and also production issues. But I think the outlook's starting to look better for a company like Paladin, but I think there is still certainly caution. You need to be cautious over this stock because at the moment it looks like even with the sustained cost savings that they are planning, a cash flow break-even price for uranium for Paladin Energy is somewhere up around $49 or $50 a pound. Now, the uranium price has bounced a little bit over the past week or so, but it's only still up at around $45. So the possibility of an equity raising for Paladin is definitely still on the table. ERA, on the other hand, another of the large producers on the ASX, it certainly is leveraged to the uranium price as well, but a lot more of the potential upside in this stock will be the expansion of its Ranger mine up in the Northern Territory. But looking forward, given that the uranium price is expected to recover, it is expected to recover quite slowly, so we're not expected to see those sort of $60 a pound levels, maybe not until 2014, 2015. So some of the smaller players, explorers on the markets, could be the big winners over the next few years. Explorers that are coming on with production around the time when the uranium price has recovered significantly. Someone like a Deep Yellow, DYL, on the market, who their flagship project over in Namibia looks to be starting up around that time, and it is a significant resource. So you might be looking at the kind of players that will be coming online once the uranium price has recovered.
Okay, talk us through Dulux, Tim, because it's holding its AGM today, and we know that it's got 90% of Alesco now, so it looks like a takeover is set to go ahead there. It's interesting that Dulux has made that decision to get more of the building products market, to go in even deeper when it's in such a sluggish state at the moment. Are they banking on a turnaround?
Well, I think definitely they are. I mean, they're holding their AGM today. It has been a good year so far for Dulux. Year to date, the stock's up around 29%, outperformed the broader market by 15%. They did comment at the meeting that sales for the fiscal year 2013 so far have been improving, and they expect profits through to March to be better on a year-on-year basis. And as you mentioned, they do have a 90% stake in Alesco now, so they can move into the compulsory acquisition of the remainder of the company. But they did say it's a little bit too early to provide any guidance in terms of earnings for Alesco. As you mentioned, that the sector that they do work in, that home improvement sector for Dulux, has been very, very sluggish. But I think there's a feeling at the moment that these kinds of building and home sectors in the economy are sort of starting to hit cyclical lows at the moment. And you look at the way that they've purchased Alesco. Alesco also in the building improvement space and building material space, it has also been purchased by Dulux at the bottom of the earnings cycle, which gives potential for significant upside in earnings. It diversifies Dulux's earnings as well. If you look at where they get their exposure to, there's going to be the exposure to new residential construction sector in the economy is going to double after the purchase of Alesco. And if you have a look at their DIY home improvements business, that's going to shrink from around 75% to 60% of revenue. So they are diversifying their revenue base, and it reduces their reliance on single customers as well. Bunnings previously makes up around 30% of the revenues for Dulux, and this is set to shrink to around 20% once they do complete Alesco and they move more into the home more into the residential part of the housing here in Australia. So with a more diversified company, looks like these kinds of sectors in the economy are starting to bottom out now. Potential upside up through 2014, 2015 in these kinds of spaces means earnings could be on the up for Dulux.
Okay, let's talk general market now, up about 0.7%. How confident are you that we can hold on to these gains? Because they are coming on some pretty substantial volumes.
The volumes aren't bad today, actually, up around $2.4 billion traded so far on the market. As you mentioned, up 0.7%, hitting new 18-month highs for the ASX 200. And really the standouts on the market today, certainly the miners. We've seen the iron ore price hit $132. That's now rebounded over 50% since the lows we saw earlier this year. And some of the stocks like Fortescue, Atlas Iron having a really good day, up around 5%. But also consumer stocks performing very well. We've got the discretionary sector up over around 1.1%. Got the consumer staples sector up around 1.3%. But I think really the market at the moment has been focusing a lot on what's going on in the US. We saw the RBA meeting minutes released today. There wasn't really much of a reaction in terms of the market or the Aussie dollar there, as there really wasn't any comments in terms of when we're going to see any further rate cuts. We saw the cash rate futures just slightly ease back of the chances of a 25 basis point rate cut in February, coming back from 63% to 58%. But certainly I think the focus is quite global at the moment, particularly on the US in terms of the budget debate going on there. But volumes are better today. I think the US futures are also in positive territory at the moment, so that bodes well for the afternoon session.